I'm not sure if you can hear me.
You're real echoey.
You're real echoey? Okay.
It might be we're in the room too. Go ahead and talk again.
How's that sound?
I can't even hear you. Hold on. Actually, I think my speakers are way down. Go ahead now.
Is that a little bit better?
Oh, that's perfect. Yeah, you're good. You're good.
Okay.
All right, let me get back to the thing. I think we're still on pause, I think. Hopefully.
Okay.
Hey, folks, I'm sorry about that. We got a little bit of technical difficulty. Pat Allen will be with us in a second, but you guys are here for this right over through here. So what we want to talk about today is we're going to kind of pull the curtain behind the scene and let you guys know how we actually pull rates from 30 different places. Because here's what my slogan is. If you're watching this video, you're trying to figure out what's going on with these. And so what I come in each day is I inform you guys what's going on with these and the whys. So what we also do is we want to make you informed of opportunities that a lot of people just don't understand that they have. And right now we're going to talk about refinancing. So if you're out there looking to refinance, let us know your numbers. We're going to go over where the numbers are today. We're also going to go over, Alan's got a couple scenarios for us, but we're also going to go over the cost. Yes, the cost. The number one question, what do you get, Alan, every time is,
what's it going to cost me?
Yeah, and then that's what you should be asking. So we're going to break down how do we compare different rates and costs and things like that. We'll give you a whole analysis of what it breaks down is. But let's go over that question, what you guys might be asking. What happened yesterday? So if you saw mortgage rates yesterday, they jumped about an 1/8%. Folks, it wasn't Greenland. It wasn't Greenland. It was Japan. What happened is the Japanese bond market saw interest rates spike. They're having some problems over there. So they had it spike to the highest levels ever in history. So it's pulling a lot of investors in. But the $100 million that Greenland has in like our bonds, it's not even a dent. So don't worry about Greenland. I told you yesterday, just relax. It's a blip in the radar. What are we seeing today? Markets are coming back a little bit here, and look at the Dow Jones. If you sold off yesterday, well, you actually lost out a lot because you sold at the bottom and again bought at the top. So we're not here for those. We're here for these things. So how do you compare rates? The biggest question we want to go through is how do you compare fees when it comes on top of rates? So let's get into it, Alan. What's your big topic for the day? What's the biggest, I guess, home run you had for the day or the week so far when it comes to refinancing? You want me to put your numbers on the board?
You want me to share my screen?
Yeah. All right. Folks, if you're out there, here's what we need you to do. Give us some of your information. What we want to show you is what rate you might be able to qualify for. So what we need from you is we're looking for what's your credit score. We need that. What's your loan amount? What's your home value? Give us your zip code. And then we'll fill in the blanks from there. So let's get over to it, Alan. Here's what you guys probably face when you're trying to figure out where mortgage rates are. And this is probably the biggest question I get. It's like, okay, Dan, what's today's rate? There's no rate specifically that we can quote you. Look down through here. Now, this is comparing current mortgage rates today. So I just went out and I went to bankrate.com. They're probably the biggest one out there. You go down through here, and there's Tomo, there's First Third, there's Third Fourth, there's Mutual of Omaha, there's New America, there's Sage, there's and it just keeps going on and on and on, and it is so confusing. Then I think they go down here and show you more rates and fees and things. So what is it? How do you figure this out? Well, you call out and you call Dan and you put in your information on our RateWatch application in our on our website. But I'm going to shut up for now. I'm going to bring it over to Alan so he can show you guys what pricing looks like today. And our rate's really out of control. So, Alan, let's go through some scenarios. Let me put you on the board if you don't mind.
Yeah,
and,
go ahead.
Let's see where we go from here. So, what's anybody you quote this morning so far that was like, whoa, that was pretty cool?
Yeah, so we had someone apply last night that was looking to consolidate a bunch of bills, and they weren't concerned. They were kind of curious to see what rate they might qualify for because their score was like right around 600. But we looked at an FHA loan, and I was pretty impressed to see what we came back with. So I wanted to share that with everybody. The situation was it was an FHA loan, a 30-year. It was a cash out. So they were, I believe the home was worth, he thought $525, and they were paying off, I believe, like $45,000 in credit card debt. And the total loan was right at 80% of the home's value. And they were at a 606 credit score, and it was in Illinois. So I just wanted to look at what the FHA rate was for this, and I mean we're still in the fives. With
Alan, can you zoom that in a little bit? Can you do
Yeah.
that? I'm having a tough time seeing it. My apologies. Maybe one more click. Okay, that's good. Perfect. That is awesome. Well, that's
Okay.
even better. So scroll down. Here's what a lot of people were asking, and this is why I'm like, come to our videos we do live each Wednesday. It's like you're waiting for rates in the fives. Well, what I'm monitoring, if you sign up for our RateWatch tool, I'm monitoring these. Trust me, I'm monitoring. But sometimes you can get rates lower than you actually think, or that's actually even published. So this is if you go out to just the web. I'm just going to go to Mortgage News Daily, and this is saying on Mortgage News Daily, they're saying the FHA rate today is 5.88 on an FHA, but that person has a 780 credit score, and they're putting down 20%, so they wouldn't really go FHA. So the posted rate on here is that, but now you're showing a rate. This is cash out. So sorry to take the thunder. I don't think people get so excited as I do because it's like we have hundreds of people. There's probably over 700 people that sign up for our RateWatch tool. Everybody's like an eighth, a quarter, that close to all these triggering. So call in if you would, because you might qualify for in the fives.
Yeah, and this borrower is going to pay off of like $45,000 in debt. So I mean, they're saving a tremendous amount per month, and their scores should skyrocket when that stuff's paid off. So I mean, it's a great situation for this borrower.
So cool. So let's say the average person right now. Let's go in, and I'm sitting there, and I'm thinking, okay, I bought in 24. Okay, and I bought it. I paid, the average house is, let's say, $400,000. I put down 3%. I paid at the time 7.5. That was probably a good rate, in 2024. What's the numbers look like to me now? Is there, and there also, do we have, I know we have we actually have those down below. I'm going to launch these things. There'll be more calculators down below, folks. You're going to give us a calculator. One calculator just shows you the cost if you were to kick the can, 6 months or a year down the road, waiting for lower rates. But then the other calculator we did was how much does it really cost you? And that's going to be the theme of this show. But Alan, keep going with it, and then we're going to float over to cost, folks.
Yeah. So, let's say someone bought the home a couple years ago and they're at 7.25. Is that what you were thinking?
Yeah, let's say 7.
Yeah,
probably 7.5 if they bought in 24. But whatever.
Yeah. I mean, let's say that they're at 90% LTV, so they have 10% equity in the home. 780 credit score. We'll keep it in Illinois on a 30-year fixed. What's that look like?
drum roll. Look at it. I mean,
Yeah.
that's lower than what the 30 years posted on today on all over the place, with a 20%, actually 25% down with a 780 credit score. So this is a refinance, and you're at 7.5. What do we have? What can we show that the cost of waiting calculator? Let's keep going. If you guys wanted some calculators, go to our website, and it's therateupdate.com. Go under calculators, and there's some that we use. It's post there we use in our videos, so check it out. We're going to have some, like I said, the calculators down below. The biggest thing is, okay, now we're going through what the rates are. So we showed you, if you bought a year and a half ago, and you're in the sevens, you can probably get 6.125 with rates. So now let's go over and what I want you to show you guys is, I'm going to jump back over to my screen, Pat or Alan, for a second. And this is my screen. And like I said, if you're out there, the biggest thing you guys got to take from like bankrate.com and all those, when you Google, who's got the best rates out there, 99% of these companies, they're just advertising, because most of them aren't banks. But then when you have them out there, here's what I want you to pay attention to. Look at this. And some of these don't even make sense. I sit here sometimes and scratch my head. And, so this one, I can't, let me scroll it down. I'll just leave it there. Third Federal. Okay, today they have a rate at 5.29. I really don't know the criteria there, but we'll just skip it for now. But here's what I want you guys to be concerned about right there here. Okay, the upfront costs. Now, what Alan's going to go through with you is what we call the loan estimate. It's probably the number one piece of the puzzle during a transaction that you really should be paying attention to. That's how you figure out who's got the best loan for you. Okay, so you're going to see here, and this place has 5.29, and if that's the only thing you care about, well, you're going to click them and say, okay, let's go with it. But then you go down through here, and the rates get shittier. But now you're thinking, okay, what's the deal? Well, a lot of the fees go away. So, Alan, if you would, let's go over this. Okay, explain probably the biggest piece of the puzzle of this application, and what's the number one question you get all the time? It's right here. So if we can explain this to you, and Alan's going to go one by one. Yeah, I'll be quiet. That's hard to do. But we're going to go through this one by one. We want you guys to understand this. And if you have a loan estimate out there, you can go to our website. It's therateupdate.com. Upload it right here, okay? But we'll review it. Alan's probably going to review it for you, send you a video back, and he's going to break it all down, probably in the same format as what you're looking at here. So, Alan, this Michael and Mary Stone called in, and they want to go over their loan estimate with you. So, I'll be Michael Jones, and I'm going to go over these with you. So, the first thing I'm going to do, Alan, is I'm going to get this. You're going to send this to me. And the first thing I'm going to do is crap my pants. Okay. And here's why. You go down through here, and a lot of times you'll see the estimated closing cash to close and the closing cost. $8,000 is what it's costing me. You'll see in most cases, this might be $10,000, $20,000, $30,000. But that's where people kind of they kind of overlook it sometimes, because a lot of times people say, well, you can finance it in. So, Alan, what would you be looking at if you're in this, and bring up what people should pay attention to, and the ones that are like, you can't really, the spot that people get bamboozled the most, and those are the title fees. So, folks, we lose out a lot of times because we actually give you the truth right up front, and I see Alan doing 20 of these a day, and we lose out sometimes because people call back saying, hey, your costs are too high. And then when they break it down, it's like, well, we're cheaper than what you're getting because they just didn't disclose correctly. So, Alan, take it away, buddy.
Yeah. So, if I'm looking at this, the first thing you want to look at is at the top here. So, it describes what the sales price is, what the term is, what your loan is. It will say conventional, FHA, or VA. And then it'll also say if the rate's locked or not. If it's not locked, that means it's floating with the market. So, whatever the rate was at the time that they printed that document is what it was at that time. And if you're looking at it 2 days later, well, that rate could be a lot different. So, just be aware of that. That's number one that I look at is the rate locked or not? And then if you want to scroll down, all that's the first page is really just describing what your payment is, what makes the payment up, your escrow, your taxes, what the estimated cash to close is, closing cost. So the difference between those two things are, the estimated cash to close incorporates any kind of down payment you're putting down. And then the closing cost is the actual fees. Now on page 2, this is really the most important page of the entire document. It really details and breaks down the estimated closing cost. Now, I will stress estimated because it is a loan estimate. At most of the time, the lender that's disclosing you the document doesn't have all the fees anywhere near them. So what they do is they estimate all the fees that could be associated with the loan. So there might be fees in here that are really not going to be charged, but they do that just to kind of they protect themselves from any compliance issues. But in box A, really that's the charges that are from the loan, the lender. If you're buying any points or if you're getting charged any points, it'll show right there. It's in this example, it's 0.25. There's an application fee, underwriting fee. Really those are all just kind of lumped together. So really what you want to look at is, the total in box A. They can call it different things, processing, administration fee, whatever, but you're looking at the total. Box B, these are fees that you're going to be charged that you really can't really shop for. You can't really choose your appraiser. You can't choose what credit report is used. So these are the fees that are going to be charged by third-party entities, appraiser, credit report companies. If there's they'll do a flood cert fee to make sure your home's not in a flood zone, etc. So those are all just the fees that you could get charged there. And then box C, this is the one section that really varies from county to county, state to state. It's regarding your title cost. So technically, you can shop for a title. You can contact any title company you want. Let them know you're either buying or refinancing, and if they provide you a quote you're happy with, that's who we'll use. And whatever their fees are will populate in here. But if we don't have that at the time that we disclose the loan estimate, we have to pull in estimated fees. And most lenders use a system that will pull that in based on your area. And then under box E,
Sorry.
Yep. Those are going to be like your recording government fees that you'll be charged to record your mortgage and your release if it's a refinance. Some places do charge you tax to do that, like Florida is one of those examples. So, keep an eye on that, but that's really nothing that the lender is in charge of. Prepaids, this is related to, items that are needing to be paid prior to your first payment. So if you're buying a home, the homeowner's insurance has to be paid. You're going to have prepaid interest, and that's really dependent upon when your first payment is and when you close. But then you have escrow. Escrow is a kind of a shot in the dark at this point. Whenever let's say you're refinancing, the amount that's needed for your escrow account will really be based on multiple factors. How much your taxes are, when they're due, how much your homeowner's insurance is, and when it's due, and then when is your first payment. So there's a lot of moving parts. So, we've seen escrow amounts either totaling $1,000 or in some cases $8,000. And technically, it's categorized as a cost, even though it really isn't. It's money set aside in an escrow account for your taxes and your insurance. So it's really money set aside for you, but you need to be aware of what's being collected at closing. And then moving on down, like to category H, that's just an optional fee. If there's other fees that are charged or optional, they'll be listed there. And then another big thing you really want to look at is lender credits. A lot of the loans that we work with, we are able to get very, very large lender credits. That will help pay for any cost associated to the loan. So if there's anything listed there, it'll have a little minus sign in front of it, meaning it's money going back to you. It's a credit. So if you don't see anything there, that means you're getting no lender credits. But if there's money there, that's something really to pay attention to. And then, the last part there is just kind of calculating. It's adding everything up and then subtracting out any credits you might be getting or any deposits you already put down to come up with an estimated cash to close. So, in a nutshell, that's kind of covering the loan estimate. What we do here is, if you're interested in, what is it going to cost you? I talk to probably 15 people every day, and they always want to know, what's the rate going to be? What are my savings and what are my costs? And at that point in time, I really don't know, because we like to be pretty accurate. So if we can, look at a mortgage statement, we can get a pretty good idea of what your costs are going to be based on your county, your taxes, your insurance, all that information. And I can kind of provide to you what we just went over to see if it does make sense. Because a lot of times we're seeing where the costs are actually going to be paid for by the loan savings in under a year, which is fantastic. And most of our clients are going to be right around the 10 to 12 month recoup time. So in a nutshell, Dan, what'd you think?
I'm in agreement with you. What I'm trying to find right now is we just posted the cost to wait calculator, and I just want to show everybody. Here's what it is, and it's free. It's down below. So here's what it looks like, and it's pretty neat. So what we did is, because most people, what they're asking is saying, okay, does it make sense to refinance? And if you watch my show every day, you've seen these go from 8 2 years ago to 6.2. They were at 5.99 last week. And you sit there and think, okay, does this make sense? So it doesn't. We want to make sure you understand that it's not just the rate. There's so many pieces of this puzzle. The biggest thing we want you to understand is your break even. Okay, it's how long does it take you to recoup your fees? So, and that varies. And like I was saying, some states it's costly, some states aren't. So we have this calculator, and you could fill it out. It's pretty simple. We went through here and said, okay, this person has a $400,000 loan. They'd like to save. We even have the calculator. If you go to our website, therateupdate.com, if you're a homeowner right now, go to our site. Right up through there, it says RateWatch 2.1. This is AI now, and I monitor this every day. We're following it. We're tracking this thing for you. So what it'll do is you can put in what rate you want to, look at what your new payments would going to be, what your costs would be, and what your break-even point's going to be. We can also review your loan estimate through here. But let's get over, because most of the time people are like, okay, I don't even know what my mortgage rate is. Well, shame on you. If you're watching this video, you should know. So if you know somebody, or you go home and you're like, hey, let's look at our mortgage rate. You don't be surprised if it's in the 7s or in the mid 7s, and now rates are in the 6s. So let's just go through here, and this is an average. I just went and just his national averages. What does the numbers look like if you're looking to get a mortgage? This one, we'll just say it's a refinance. So this person is looking for a $400,000 loan. The savings, that's where we'll trigger it in there. In our RateWatch tool, you can even put in how much would you be interested in savings a month, and maybe you'll hit there without hitting that rate. How many points you'd be willing to pay. And this is the averages out there right now. This is more on Mortgage News Daily, bank rate, and all that. Average lender fee, $11.95. Title fees is usually about $1,200. Then your other fees through here. So then you're going to go through and over here, and this is, what those equate out to points and everything else. And so this is what my break-even point would be. But then what we want to show you guys is how much is it going to cost you? So you're going to go through these different cool tools and everything, but it's going to give you the opportunity to see how much you can save, how much it's going to cost you, and then what your break-even point is. So check out the calculators down below. If they're not there yet, I will be posting them. One's going to say true cost of waiting. That's actually going to be the calculator. And then the other one's going to be the cost, and it's going to show you right on the screen. That's what my break-even point is. And per Dave Ramsey, and you guys might follow him, he's saying if you can have a break-even point of under 2 years, it's a good one. I'm saying if you could do it under a year, that's our goal here. So that's what we do. That's how we do things here. But let's get over and see if you guys have any questions. This should be participation, folks. So we want to get you over to, let's get over to just see, let's see where rates are right now. Okay, let's get to see. Closing March 1st, have a par rate of 6.25. Should I lock or float? Let's see what the market's doing today. That's why you got to watch this every day. If you guys haven't subscribed and you're trying to figure out when to lock, subscribe over there. Because here's what happened yesterday, folks. Let me just give you some tidbits. Let me see if we got more questions about rates on here. If we do. Great information. Thank you. And what else is here? Refi scenario. We'll get to your scenario real quick. Here, let's get back to here. So what happened yesterday? Don't go away. We'll do your scenario in a second because that's why you're here. What happened yesterday is this. If you guys follow me every day, this doesn't look so bad because we had a huge recovery today. It wasn't Greenland yesterday. What happened was the Japanese bond market went crazy. It was kind of like, when our rates went down, when mortgage rates went to zero. Well, the Japanese market's being manipulated right now, and their rates are skyrocketing. So it's pulling investors all over the world. So now it's like, okay, if all the rates all over the world are going up to kind of combat that. So I don't know how long it's going to be long-lived, but I was like, okay, just hang tight because that really shouldn't have crashed the stock market yesterday, but all mainstream media's news was making everybody nervous. So we had basically a huge move in the market yesterday. Rates went up 1/8%. Well, they're giving it all back today. So I said, relax, we're going to be okay. So if I'm you, wait till tomorrow, watch my videos. The economic news for tomorrow, I don't think is much. I don't know if the PC is out tomorrow or whatever, but pay attention. Just subscribe, watch every day. I'll give you my recommendations. If you're closing soon, what to do. If you're closing over 30 days, what to do. And if you're closing even longer than that, what you should be doing as well. But the markets are looking pretty darn good today. They were down 20-something ticks yesterday, so we almost recovered all of that. And if you're in the stock market, you recovered it all as well. So let's get over to the scenario that we have in regards to, I don't know if Alan, if you still have your pricing up, I can bring back your screen if you don't mind.
Yeah, go ahead.
And we can, you have that set up already?
I punched in his information. Yeah.
Oh, bam. Paco Sauce. What's up, my brother? Refinance scenario from Colorado. I know Paco Sauce, so that's why I called him my brother. 435 value. You got it, right? You know what's going on there. Thanks for joining us, Paco.
Yeah, he did himself a favor. He put in his income, and his income will qualify for the Home Ready program. I looked that up. So he'll get a discounted rate. He's looking at like 5.875.
So if you're waiting out there for rates to get in the fives, call us. Don't even wait for the RateWatch to trigger. This is getting pounded on our end, the RateWatch trigger. So if you're out there and your rates in the sevens, call us because you're at least probably you can almost recover 1 full percent. But remember the fees. So Alan, in Colorado, how's the closing fees in Colorado?
They're good.
Usually the title fees are the area that get most people. So Paco, reach out to us. Actually, email me right after this. Hopefully the rate works for you. What I'd like to do is just dive into the costs. Remember the costs that are involved in this. We really want you to pay attention to that. So thanks, buddy, for joining me, man. I greatly appreciate it. Let's get to the next one. We got a show here. It is great. I will wait and see what tomorrow holds. You did good. If you didn't lock in yesterday when everybody was freaking out, that's why I'm like, okay, hold on. We're probably going to see some recoveries because it wasn't Greenland like everybody thought. And when you really dive into it, yields all over the world went up yesterday. It wasn't anything catastrophic that really had teeth to it. So, yep. Thanks for that. And let's see what else we got. Rubitronics. We have a $525,000 price, 3% down, conventional 07728. If you could, Rubitronics, what is your credit score? It is a 700 credit score. If you don't mind, let me give you some tricks. Okay, so this is tricks. There are those that still stayed with us. Your income plays a huge role in this because Alan, I don't know if you paid attention to what Alan said just a little bit ago. He's like, hey, this Paco put in his income and actually worked out for him. So there's programs that Fannie Mae and Freddie Mac have. You don't have to know who they are. You'll probably know them within the next year because they'll be all over the news. But they came in and said, if your income is at 80% or less of the area median income that you live in, we're going to waive a whole bunch of fees for you to help you out. So please, when you're putting in your information, I don't care where you go, make sure they know your income. Or if they don't ask, make sure you hang up and go to the next person, because they should be asking you that, because it plays a big role in these things over through here. What we got? There another question?
Did you say that his credit score was 700?
Yes, sir.
Yeah, 3% down, 6375.
Hey, just for kicks, let's go over. This might be a perfect example. What would this look like if this person went with an FHA loan? And when Alan looks that up, we'll give you the pros and cons. Okay, there's huge pros with an FHA loan. There's some cons. Many times the pros outweigh the cons, because you can get a much better rate, lower what they call PMI, they call it MIP with that. You do pay FHA a fee, but it's easy to refinance after the fact. If you have an FHA loan or a VA or a USDA loan and your rate's over 7, make sure you go home, you call your wife, call your husband, call whomever, and just grab your mortgage statement tonight. And if it's over 7, especially if you're an FHA, USDA, or VA loan, call us. I don't even want you wasting your time and putting your information up there. Call. Or email me and just send me your mortgage statement. We'll go over a video with you. We need to know, if you send us your mortgage statement, it gives us everything we need. We need your credit scores, though. Okay, so we'll send a video back. You might be surprised you're going to save a ton of money. So sorry, I'm getting all worked up. I'm getting all worked up, buddy.
If this person were to use a FHA loan, their rate would almost be a point lower.
Oh, there. So, but here's the bad part about FHA. They charge you a fee. Okay, but we're going to go over that fee with you in the loan estimate. And again, remember, the loan estimate's really important. It's going to be in there. It's fine 100% of the time almost. It's financed in your loan, and it's not as dramatic. Instead of you having to bring in maybe $8,000-$10,000 for the FHA fee, they fund it in there, and it might change your payment, $10 a month. But you can see by the rate, it's much more beneficial sometimes especially if you have a lower credit score. So again, tidbit, trick for the day. If you have an FHA, USDA, or VA loan, or somebody with one, your kids, uncles, whatever, check and see if their rates are in the 7s. And if they are, call us, please. That's all I ask you there. Another scenario, anything else you want to go over when it comes to that?
No, like Dan was saying, definitely the income plays a huge role. If we go back to this one, and let's say it is a home ready, that's going to have a rate. This was 6375 without home ready, but if this person does utilize the home ready program, I want to see what that does. Yeah, I mean, look at that.
There you go.
That's a 0.5% lower.
Perfect. So if we didn't ask you, and we're trained to ask you, if somebody didn't ask you or figure out your income or didn't really put it in there or didn't click, there's buttons we have to click behind the scenes just to say it's eligible for the thing. If we don't click that, we don't get the results. So don't let that happen to you. Okay, so that's what we're trying to say. So let's get back. Any other questions that we might have? We have another one here. I don't know. It's just saying R. Okay, so can you see that one? You good?
Yep. VA. This is
God bless you. Veterans,
purchase.
love you. And if you would, you're a veteran, so thank you so much for. Let me know how you found me. Was all of a sudden we're starting to get. Alan said the other day, he's like, "Dude, would you put out a VA video?" And I'm like, "No, I put out the VA thing from Jennifer Baniston or whatever. I don't really mean to butcher her name, and she exposed how a lot of veterans are just getting hosed at some of the big lenders out there.
We do.
Alan and I basically got booted out of one place because we weren't charging people enough, and so we decided to leave. And we are glad that we are at the bank we are right now. So there.
Yeah.
What do we got?
So 5625. This is with no money down. 720 credit score. If you do put money down, that might be recommended if you're not receiving any VA disability, because you will be charged a funding fee. So that's something that we could review, but you probably wouldn't want to put money down. There's, the VA, there's no mortgage insurance. You're not going to really see much of a difference in your payment if you do put money down, but that'd be something we can go over all your options. But yeah, I mean, mid 5s, which is fantastic.
A year and a half ago, people would be like, When are rates getting back in the fives? I got to buy a house in the fives. Now they're back in the fives. So this is what we wanted to get out, folks, just to say, hey, the headline numbers, they might be in the sixes. There's thousands, if not millions of people waiting for the fives. They might just be here. So let's see if we got anything else to go through. Hello, not sure if I missed one similar, but how about a refinance? Can you see that one, or I can?
I got it. Yeah.
Like, okay.
Okay. So conventional worth 706. 500,000. Credit score 815. 96001.
Sunny California. He
did put the income in there, so I think that's going to be over, but I'm going to figure it out just in case. 15833.
Hey, I'm just going to be a second set of eyes on here for a second. You might have already seen it, but their LTV is at 70.8. Oh. I don't know if there's an LLPA for 70 or and above.
Let's see. Well, sorry about that. I'm not seeing a.
No, okay. So here's what I was looking at, folks. And my apologies, but go over the rate and then I'll tell you what I was looking at.
Yeah, I mean, you're probably looking at the 5875 range still with this situation here.
So you might have put in our system, you might have put 6. It's not going to trigger for some time. So that's why I'm trying to even get videos out to people saying, hey, just give us a call. And if you want to be in front of the curve, just give us a call and we'd love to help you maneuver through this. Let's get to... Well, that's what we're here for. Paco sauce. Paco sauce, did you give me a... No, I'm just kidding with you. A super shout? Hey, can you guys all hear us okay? Because last week or the week before, I found out that my mic, I wasn't using actually my microphone. I was using my camera's mic, and it sounded like shit. So, sorry about my language, folks. But if you ever called in, all right. Anything else? So let me recap this. I know every day I go over rates, and here I'm going to go over to my screen. So we'll kind of let's conclude and finish up. I just want to highlight some things for you guys. We go over rates every day, and I get it. And you guys, hopefully, you come out and you support us here by putting your information into the RateWatch tool. Now you can even use now the loan estimate tool. But our whole goal is to educate you guys, help you understand how this all works. Because you could see by when Alan put in, if you just didn't put in that income limitation thing, your rate would have been a quarter, maybe 3. It's higher. So these are the things that we have to be meticulous about. And the other thing is we have a slogan. So let me tell you about who I am, what we do. So if you're on here now, you probably understand it. But me and Alan, we've been working together for years and years and years and years and years. We work at a bank that provides us licensing throughout the whole entire country as well as Puerto Rico. But the reason why Alan and I were here is we've been brokers for I've been a broker almost as long as he's been alive. But we want options for you guys. I don't want to work at a bank and be pigeonholed to just our rates and programs. So we joined this bank because they're set up with lenders all over the country. There's banks, credit unions, mortgage companies, and this is what we do. We use these systems to help maneuver you through the system. So program-wise, if it's out there, we got it. You're looking to buy a house with minimum down payments, 3% down, 0% down. If you're a veteran or a USDA, I'd love to help you. Look at the numbers. Look at the true numbers. Make sure you guys understand how this all works, especially when it comes down to the cost. That's why every day you probably, hopefully now understand a little bit more when I come in and say, hopefully you understand a little bit more about these now. Well, maybe hopefully you understand a little bit more how fees work and a lot of these things. So we go over this with each client every day, and Alan does this. He'll go through this with you if you send in your loan estimates, or even if you work with us and get a loan estimate as well. So like the one person, Paco Sauce, just said, he said, when he was working with his previous lender, he didn't even really get many updates. Folks, we try our darndest to keep you updated, but the goal is we try to get you set up correctly out of the gate and put this in place to make sure we're getting you right to the right end finish line with all these things. So that's it for today. Hopefully you understand a little bit more about how these things work. And hopefully if you're a homeowner, maybe home buyer, maybe you're a loan officer or realtor trying to figure out what's going on with these, well, hopefully maybe now today you understand a little bit more on what's going on with these and the whys behind it. So now somebody says, it was Greenland that caused mortgage rates to spike yesterday. You say, no, it wasn't. It was Japan. They're going to look at you like you're crazy. And you actually know what you're doing. So thanks for watching, folks. Thanks for supporting us. God bless. Have a fantastic day. We'll see you next week. Same time, same place. Thanks again, Alan, for joining me today.